Hey guys, in today's episode, I'm going to share with you another one of our accountability sessions, which are our interviews with up-and-coming traders who are going through our program. This is a really great interview because our trader talks about how he's recently made the shift from wanting kind of fancy, flashy name brand things to really wanting something that is much more important, and that is freedom. And he's going about setting up a plan to be as free as possible as early as possible. So if you're new and kind of in that same boat, make sure you listen to this entire episode because he's also going through the normal obstacles that, well, traders go through on their path to becoming consistently profitable. So hope you guys enjoy. And as always, if you want to be a part of these accountability sessions, sign up at www.tier1trading.com. It comes with part of your 14-day trial membership. Just log in each and every Friday. You can do one if you want, or you can just be like a fly on the wall and watch.
Welcome to the accountability session. We run this every week. Great chance to catch up with the traders, see where they're at, what they're struggling with, what they're working on, what they're looking to do next, and just kind of holds a level of accountability that is slightly out of the trader's comfort zone. We're not kind of military here, and we're not going to enforce any actions, but it is nice to come on and kind of sense check and state what you're going to do. Lay your cards on the table. You do get a great feeling from doing that. And today we've got Callum Timmins. Hello, Callum. How you doing?
Hi, I'm very well, thank you. How are you?
Good. I'm very well, thanks. So for those who are in the group who haven't had the pleasure of already getting to know you a little bit, Callum, tell us quickly a little bit about yourself.
Okay, so I joined Tier 1 on the 28th of June, so last month. I'm currently at university, but obviously at university we get so long off in the summer. I'm back at university in October, so I mean I've got like so much time off. I'm going into my final year. I'm studying maths and economics, and since being at university, I've obviously spoken to lots of different people. It's really opened my outlook in terms of like the future, what it holds. I'm from quite where I'm from Mansfield, and I want to say that a lot of my friends and peers, the outlook on life isn't great. For me, to get the best out of life, I always saw education as a good route in terms of bettering myself. And a lot of the peers I'm around now, like their outlook on life's really like showed me what the potential is in terms of bettering myself.
Right.
Whereas I didn't really see that before university.
Sure. So how old are you?
I'm 21.
21.
So when I left school, when I left sixth form, I joined PwC. Obviously, I'm sure you'll know them, the accounting firm. And my mum and dad thought it'd be a good idea for me to do an apprenticeship because I wouldn't get into debt. And accounting was, like people say, it's based on maths and stuff.
Yeah.
And it is to some extent. But I didn't like the job. And I knew that doing accounting, doing that apprenticeship would be very narrow in terms of the options I would have had, having stayed there for 4 years and then qualified. And I didn't like the job. So from then so I left after a year and thought that being at university would open my options up in terms of job prospects after university. And it will, it definitely will. And the reason that I chose to go there was because I've always enjoyed studying maths and learning about finance and the economy. So I study maths and economics. So yeah, that's a bit about me.
Awesome.
Yeah.
What university are you going to? Nottingham, is it? Or
I'm currently at the University of Leeds. I'm going into my final year. The past 2 summers, because obviously you get a long time off, I've done a lot of research into trading. I've signed up to a couple of courses, not great courses, nothing like this. But they've given me a good base level to then be giving me the confidence to be able to pay for something like Tier 1. Yeah. And also things like learning like what pips are and just the market and understanding things like that. I guess it's given me a base to then be able to progress in Tier 1 faster and go through the training courses and obviously accelerate through that.
Absolutely, yeah. I mean, for me, there's no wasted money in any education, to be honest, because it's always lessons or growth, or it's just lessons. So
Yeah,
that's awesome to hear. Good
yeah,
to hear that you're enjoying tier one. Before
yeah.
we get
It's
on
great.
to like kind of what you're working on now, what's the bigger goal for you then? Because you're obviously in university doing economics and maths.
Yeah.
What have you figured out where you want to be? Like what your life might look like in 5, 10 years?
So prior to university, I was more interested in designer clothes, um, materialistic things. I would like. I worked for UDC for a year, and a lot of my money went on like silly things like Moncler coats, Balenciaga shoes, just things that were
Wow.
materialistic. And
Yeah.
having now been at university and realizing how much time my mum and dad are having to spend working to help fund me as well as their life. And obviously they're coming to this point of retirement now. And like I'm seeing how hard they've worked. Like my dad's worked 7 days a week for a long time. Some weeks, even now, he still works like 50, 60 hours and he's like 54. And it's made me think like, do I want to be doing that? Like, do I want
Yeah.
at their stage in life, I want to be in a better
Winding
position.
down.
Yeah, I want to be winding down earlier than that. So for
Yeah.
me, I'm thinking, what's the point in having designer bags, clothes, whatever, just to impress people when really one of the best things is having freedom, having time to spend with friends, family. So for me, ultimately, the goal is to have a plan in place to be able to earn an income, um, to be able to, yeah, to basically be as free as possible,
Yeah.
as early as possible in my life.
And that's such a
Um,
great realization, especially at 21 years old.
yeah, I mean, I was tempted to join Tier One last summer, but I just didn't have the confidence to do so. But I still think that obviously, even being 21, it's such a, I'm so young that I mean, I just, yeah, I'm glad I've realised it now,
Yeah,
that
definitely.
for
Definitely.
sure.
A lot of
Um,
people don't realize that until they're about 50, 60 years old, like you say.
yeah. Uh,
Awesome. So what are you currently focusing on? What are you working on now? Like what's consuming your time right now?
Okay, so I've obviously been I joined on the 28th of June, so I've been doing this like for 4 weeks or so. I mean, it's been tough obviously because of the weather and stuff in the UK, like going through the training videos. Some of them I've watched like more than once because I mean, it's been like 38 degrees. Not everything's gone in. But
Yeah,
I'm
right.
current, so I really liked your strategy videos where you literally give people the strategies. And one thing that surprised me was the I heard you say in one of the videos, I think it was the daily chore one, that if you used to give people a strategy that was profitable, then out of that many people, you was saying how you only think 15% of people will be able to trade it profitably,
Yeah.
a profitable strategy, but only 15% of people would actually trade it profitably. So for me, that really like hit home, and I was like, wow, like
Yeah.
what are people doing wrong? So I mean, that was quite a shock. But for me, I really need to work on um, obviously not just the strategies, but everything that comes with it. So I've done quite a lot of reading on the psychology behind it. But what's taken my most time is backtesting, obviously.
Yep.
Um, the daily chore, I really like the strategy, but obviously, like you say, you need to backtest it. Otherwise, you won't have the psychological confirmation, you won't understand the strategy, etc. So
Yep.
I've backtested that for the 13 pairs which you actually gave in the video, apart from the New Zealand dollar, which you gave in the video, you said that it wasn't profitable. So I just thought
Sweet. Yep.
there's no point in wasting time backtesting that. So I backtested them, and I found that it was actually more profitable to um, to place trades when, so obviously for the daily chore, it's when the candle opens or closes, depending on whether it's buy or sell, in the upper
Yep.
50 and closes in the upper third. But I created a filter when backtesting to say that it opened or closed in the upper third or lower
Yep.
third, similar to your filter
FTB.
in the FTB.
Yep.
Yes. I did that in the daily chore and found that it was more profitable. Okay, you're not trading as much, but I would prefer not to be in the market as much, not to have your so-called activity trades, but to actually just be trading when you've got the best probability of making money. So I essentially made so I filtered. I made a filter column on the Excel spreadsheet and found that for all the pairs, it was more profitable for the upper or lower third for the daily chore. So I then obviously had I think it was about between 3 and 5 years worth of data for the 13 pairs, but there weren't actually many trades for the upper and lower third. I think it was ranging between about 8 to 10 trades per pair. And obviously that's not enough. So my plan now is to backtest even further back, just using specifically the filter of the upper and lower third. And my theory is that if I can do this for all 13 pairs and find that it's profitable for all of them, then I should have a strategy which I can trade through all the pairs, which provides enough signals and enough trades to not actually be bored. Because obviously you don't want a strategy which is 1 trade per year per pair. For me, it wouldn't work. You're out of the market too much. But if I was trading all 13 pairs and I was getting between 5 to 10 trades per pair, it would offer enough. So I've done that. I've back-tested the FTB, but I did it on your specific requirements of the upper and lower third and found that was very profitable using the pound dollar, obviously the 2 pairs that you give. And then obviously I went on to the trend continuation trades and more of the structure-based trades, which you also give. Now, for these strategies, I actually found back-testing, I found it difficult in the sense that, for example, I think it was yesterday in the live room, you gave an example with the New Zealand dollar, the pair, the bias was bearish, the high test candle wick hit the structure zone, and then it, I've noted it down. Yeah, so it's a high test candle wick, and obviously it hit the structure zone. But let's say, for example, this candle then went on to become bullish. The next bar market candle, went on to become bullish and broke above the structure. For me, what I thought would then not the trend zone would it not change? And obviously, if you're back testing structure, I just found it more. I found it difficult to word, but I found it more
ambiguous, more subjective, right?
Yeah, more subjective. It's not like you've got numerical values, because structure obviously changes, and if you're back testing it, then you don't know. Like obviously, yesterday's example, like I said, well, you might have back tested the new structure high, the trend zone that you would have originally drew. You might draw differently, and also when you're back testing structure, you can actually see what wins and what doesn't. So your mind wants you to draw certain things. And for me, I haven't really back tested much of it because because it wasn't going to be true. I mean, there's no point in back testing something if it's going to be biased. Yeah. Precisely.
Yeah, it's totally, when you have, this is where traders become unstuck, because they kind of confuse discretionary trading with more kind of, so the more subjective a trading system is, the more filters you might consider adding in just for grading your trades. So let's just say, for instance, you've got all of the principles, all of the tick boxes checked. So we're bearish, you're in a pullback, you've got some indications, you've got even handle numbers, you've got the whole shebang, you've got the price action deceleration, you've got a candlestick pattern. And when you have all of that, that could be an A+ setup. Whereas if you have 5 of them, it could be an A. If you have 4 of them, it could be an A-, right? Or 3 of them, it could be a B. And that's a way of bringing consistency and objectivity to a subjective system. And it's not so much, you don't have to have so much mechanical processes to it, because you've got the filters to protect you. Does that make sense?
It does, but would you not have had to have back tested all of them different filters I mean, surely, surely you've had to have back tested all the different filters.
Well, you backtest, So basically, you backtest everything at once, and then you strip out, and then you can start to see, well, I missed out on this opportunity because I needed that filter, but actually, how many times did that hit profit, and how many times didn't it, and do I actually need that filter on that pair?
Okay. Right,
so you kind
sense.
of test as much as you can in the first instance, and then it's just a case of stripping back and and becoming more aggressive. That's the beauty of it. Also, you mentioned, not taking as many trades. Something I'm going to do a little session on is something called positive carry, and that's basically to do with rollover costs that brokers charge you based off the interest rates on each pair. And there's actually, there was a trade that I held on the Aussie CAD years and years ago for I think it was about 21 months. It was a year and 9 months I held the trade for, and I earned 6% just from interest on the trade. So it wasn't even to do with my performance. It was just interest from rollover costs. So there is a massive benefit from doing that. I think the whole trade was like 21.5%. And I got 15% from the actual performance from the capital gains, but I got about 6% from the interest. So there's little tricks like that you can use as well on swing trading the daily time frames, and it's very, very effective. So it's not always about being in tons and tons of trades. It just depends, what you're looking to do, what you're looking to get. Would you not
get huge charges though for the overnight? For the overnight charge, obviously given from the broker, like if you're holding onto a trade for so long.
Yeah, but the overnight charges are dependent on the interest rates between the two currencies. So both currencies will have a different interest rate.
Okay.
And depending on if it's positive or negative, it will either be a net carry or a positive carry. And if it's positive carry, that's a net profit to you. And if it's negative carry, then that's a charge to the broker. So there's rollover costs, and then there's interest rates, and there's a differential between the two that can actually add or subtract more to your account. This is like the silent killer of traders when they don't realize what's going on and they don't understand rollover costs properly. And I think I'm going to do a lesson on that in tier 1, just because I think it's come to light a little bit with quite a few traders, and they don't quite understand it. So.
Yeah.
Anyway, something for another time. So just tell us then, where are you hoping to be by the time you get back to university? Then
I'm hoping to have a set number, a good amount of strategies which I can trade at university flexibly. Yep. Obviously, my time at university is flexible, so in terms of the strategies which I trade, like I am open to a huge number of strategies. I mean, I couldn't day trade, like I couldn't be looking at my computer all the time, but I can certainly spend a lot of time trading. So that definitely doesn't refine too much the number of strategies I can trade. For me, I want to have a set number. I want to have some really good profitable strategies. Now, one of the questions that I was going to ask you was, and I know you can't give me a specific answer because it's not a one answer fits all question. But one thing that I want to know is, for a 1-to-1 risk to reward ratio strategy, for example, what would you be looking at in terms of the strike rate for the strategy? Like, I know that you mentioned that you shouldn't be looking for this golden strategy, that you shouldn't be constantly changing and searching for new strategies. You should stick with one, which is fair enough. But I want to know, when backtesting, what sort of numbers should I be looking at and thinking, okay, that provides hope, like that's good.
Yeah. I don't think it's necessarily to do with a strike rate. I would say it's to do with the amount of profit on the overall.
The
strike rate really doesn't have too much to do with that.
The only reason why I said strike rate was because I was just referring to like a 1-to-1 risk reward. So for that particular strategy, obviously, surely it would be strike rate, would it not?
No, you're right. Yeah. See, if you want a 1-to-1 risk reward, you need a high strike rate. Yeah.
Yeah. So what sort of strike rate? I mean, I'm coming into this pretty new. Like, I don't know, like what sort of strike rate would be like. Would you be happy with on a 1-to-1?
Not if it was a 1-to-1. A 50% strike rate would not be
No, I didn't say 50. Sorry, I didn't say 50. I must have cut out. I said just what sort of strike rate would you be happy with?
Oh, what sort of strike rate? Okay.
Yeah.
Have you seen our little chart that we did for strike rate and risk reward? Have you seen the little matrix that we did?
No, I don't think so.
Let me see if I can find that for you.
I mean, at the minute, the strategies I've been backtesting, I've found that in general, the majority of which a 60% strike rate, which have a 60% strike rate, which for me is really good. Obviously, that for me is satisfactory. But I just wanted to have someone else's opinion on this. Obviously, I didn't know.
Yeah. Let me just show you this. Let me show you this. See if I can share the screen. Portion of screen. Oof, there you go. So I don't know if you've seen this. Have you seen this before?
It does ring a bell, yeah.
Yeah.
Screenshot that.
So again, it's going to depend on the actual trader, but if you're 50% strike rate 1-to-1, obviously that's not going to be. You're just going to be break even. In fact, you're going to lose money over the running costs, right? But this is a great kind of diagram to use to understand where you sit within that. So a 67%, a reward to risk of 0.5 to 1. You're going to have a 60%. That kind of gives you a gauge of where that is on the chart. Personally, for me, I would like if I have a 1-to-1 risk reward profile on a trade. I like late 50s, early 60s for performance for strike rate, right? So
perfect.
That's personally what I like to see. I like to push into erring on the side of caution. And then I'll add it in and I'll keep it, and then I'll build something else and I'll develop something else, and then I'll add that in and see how they perform together. And it's about, for me, just keep adding little strategies and refining little strategies so that I can increase that. But a good starting point for me on a 1-to-1 would be a 58%, 62%, something like that.
Yeah, no, that's perfect. That's
Cool.
kind of what I wanted to hear. Really, that's great. And one other question, sorry, but in terms of monitoring the strategy, obviously this again depends on what sort of strategy you're trading. But at what point, if it's performing badly, do you kind of either have to I wouldn't say let the strategy go, but I guess like completely change the strategy, or would you just look to refine it? Because obviously, if you've backtested it correctly, you'll have the drawdown in the past, like the maximum drawdown, the maximum number of losing trades, which are obviously two quite big things. At what point would you start to be like, the market's changed such that this strategy is now no longer that profitable in current market conditions?
I wouldn't be any jumpier than a 6-month review.
Okay.
I'd usually give it 12 months, but to be honest.
Okay.
So I don't want to jump around. I don't want an annual loss. Like, that's not going to be any good for anyone. But I wouldn't consider changing it or dropping it for between 6 and 12 months. The last pair I did that with was the euro yen on my intraday trading. And funnily enough, 2 years later, I'm looking at it and I'm still tracking it, and it's now really great. So you are going to have this kind of dynamic. Things aren't going to work forever. This is what your edge is, to maintain and be on top of your systems, and not let it get to death by 1,000 cuts. So you want to stay on top of it. Check in who's stealing 10p from the till every day. You really need to stay on top of it so that you don't have to start from square one, wondering where all your money's gone. That's the biggest danger. So just understand that they're all going to change. Don't have the kind of knee-jerk thermostat on-off type thing like people do with their heating. You want to just tweak it, monitor it, make sure it's still working. Is it in the ballpark that you'd like to see? If not, then consider dropping it in another 6 months. Yeah, don't
That
do
makes
anything
sense.
too knee jerk.
Yeah, no, that makes perfect sense. Monitor it, create filters, and if it's just slightly play around with that, I guess.
Yeah, that's it. I have a way of like dynamically measuring my level of aggression or conservativeness. So, for instance, if I find that I can be aggressive to the tune of 2.5% across my portfolio, then the next year I might be 1% more aggressive. Does that make sense? And I won't go 2.5% more aggressive. I'll go 1%, even though it's proved that I could be 2.5 over the whole year. So things like that, staying on top of it. And again, I can share. I think I did a module on that on journaling. Actually, it's kind of in there. So things like that. Just be aware of and just understand that you've got to maintain your edge all the time, which is constantly deteriorating. So mate, you're 21 years old. You've got a lot of time and energy. It sounds like you're really fully in on this. So I really look forward to following your journey along and seeing what you get out of this and where you get to. So it'd be great to catch up maybe at the end of the summer, just as you're about to go back to maybe September, late September time, and see where you're at then.
Yeah, no, that sounds great. And I'll book one in for then.
That'll be cool, Callum. And if you're able to get down to London, we've got to meet up on the 13th of August. But if not, I understand you're quite away.
I'm not sure you can see. I've got a broken collarbone at the minute.
I thought that was your designer bag.
No, I've got a broken collarbone, so I won't be.
Right.
But on the next one, whenever you do the next one, I'm sure I'll be able to book on. But also, thank you very much for your time. I really appreciate it.
It's great. These sessions are important and they mean a lot to everyone. So thanks for coming on, sharing your progress. If you want to catch up with Callum, reach out to him in the platform. And guys, get yourself booked onto one of these sessions. They are very powerful. You'll wake up the next day feeling a little bit more of a burst, a little bit more energy, fire in your belly. And now you're accountable to catch up and make sure you've made progress. So really, really cool. Until then, I'll catch you on the platform. Have a great rest of your day and weekend, and I'll see you guys.
I hope this interview hit home, and I hope it inspired you to get on the same path as this trader. Something you can do to get started right now is sign up for the free workshop that we have going on. It started August 1st. It's going through the 12th, so there's still time to catch up on what you missed. There's still time to check out the live sessions that are to come. Just sign up at www.tier1trading.com for the Bridging the Gap 2-week online trading workshop. See you there.